Acting Comptroller Brooks, I want to commend you for the work you've done promoting innovation at the OCC, particularly within the digital asset space. I'm particularly encouraged by the OCC's July interpretive letter related to banks being able to provide custody services for digital assets, especially focused on holding the unique cryptographic keys. I appreciate the approach, and it echoes custody language in my bipartisan bill, the Token Taxonomy Act. Action by the OCC was much needed, especially as states such as Wyoming have already provided legal clarity, for example, with a special purpose charter for Kraken Financial. My main concern within this space is that we do not have sufficient legislative clarity and regulatory clarity that will enable digital assets to truly be adopted and to provide the safeguards that markets and consumers and investors need. Do you believe that digital assets could benefit from the certainty that comes from legislation signed into law? In particular, could you address this with respect to the custody issue?
Well, first of all, Congressman, thank you for the question, and I've always appreciated your deep engagement in these issues going back, many years together. What I would tell you is on the custody side, I think that clarity around what constitutes a qualified custodian and what assets are permitted to be custodied would be a good thing. And I think, as you noted in your Token Taxonomy Act and is in some companion legislation kicking around, has also recognized there is a lack of securities law clarity that needs legislation. At the same time, what we have concluded at the OCC, and this is work that began long before I got here, is that digital assets are analogous to other kinds of assets that have entered the system over the years, and that the banking system normally has been the vehicle for transmitting that stuff across the system. And so picking up on a discussion that Congressman Hill and Vice Chair Quarles had just a few minutes ago, our basic view is that blockchains are essentially private payment networks. There are other private payment networks in the world, like the ACH system. That's a private payment network. It's just owned by a very small number of big banks, and it's only open to banks, versus blockchains are payment systems that anybody can join, right? They're open for everyone. They're free and equal to everyone, and in that sense may be superior in other ways to existing networks. That's really what our work in this space is about, is the recognition that what crypto and blockchain are fundamentally about is changing the way that people interact with each other in the world of finance, in the same way that the internet changed the way that people interact with each other for internet information. And so I thank you for your leadership on that. I think that securities clarity and custody clarity would be great as an act of Congress, but I also think that the OCC has a fair amount of existing statutory authority to clarify banks' role in that overall part of the financial ecosystem.
I agree with your viewpoint, and thanks.
That is dope. Open and free to everyone. So I found some news today on just what some people is talking about. It's talking about Amazon. Imagine if Amazon accept Bitcoin and other cryptocurrency. I think that would be dope. But okay, let's get into the news. What would it take for Amazon to accept Bitcoin? Okay, to date, Amazon has shunned Bitcoin and other cryptocurrencies payment method. Obstacles to adopting include scalability and the market volatility risk associated with holding crypto. Amazon already owns several crypto-related domain names, including AmazonBitcoin.com. They own AmazonBitcoin.com. Okay. With annual revenue of $280 billion, Amazon is a global juggernaut of e-commerce to date. However, it shunned Bitcoin and other cryptocurrencies payment method. Throughout, it's more than happy to sell your good emblazoned with the Bitcoin logo. Of course. For Bitcoin advocate, the prospect of the world's biggest e-commerce company accepting Bitcoin payment is a tangerine prospect, one that will signal mainstream acceptance of cryptocurrency and propel a new wave of Bitcoin adoption. Amazon has a massive 48% market share of the U.S. e-commerce retail market, with the net revenue in excess of $280 billion as of 2019. That plays host to over 150 million Prime users worldwide, and that's just Prime, while undisclosed Amazon users base is undoubtedly much higher. As luck would have it, Millenniums who count themselves as some as Bitcoin biggest fan also have an affinity for Amazon, outpacing baby boomers, Gen X and Gen Z when it comes to membership. That is pretty dope. So with over 150 known customers, many of whom comes from a demographic and enthusiastic about cryptocurrency, it seems like Amazon accepting Bitcoin payments should be a no-brainer. And yet, form back of 2014, Amazon has refused to accept Bitcoin, so that was holding up Amazon accepting Bitcoin. One day they will. Next piece of news: Belarus bank to offer Bitcoin purchase with Litecoin and Ether coming soon. You gotta accept Ethereum before you accept Litecoin. Belarus Bank, one of the largest credit institutions in Belarus, has partnered with OTC broker Whitebird to offer a Bitcoin buying service, according to an announcement Monday. For now, purchase will be available via a bank card issued in Belarus and Russia. The two countries' financial systems are well connected, but going forward, the bank is planning to sell cryptocurrency in other neighboring countries such as Ukraine, Germany, Georgia, and Commonwealth and independent states (CIS) nations. According to Belarus Bank spokesperson Alex Kulk, users will be able to withdraw Bitcoin BTC plus 2.17% to their wallet with no intermediary whatsoever. This service will function using Whitebeard online infrastructure. So that's cool to see that another bank is going ahead with this. Good news. The SEC is still working out what qualified custodian means for crypto. The U.S. Secretary and Exchange Commission (SEC) is once again asking about qualified custodian and how crypto custody fits into this regulatory framework. Last month, the Wyoming Division on Banking granted a non-letter to Ocean, a wealth management firm, to offer custodian service for digital asset, which include virtual currencies, and call itself a qualified custodian. If you'd like, you could continue reading. I don't really find this interesting. So next piece of news: 2.3 billion in Bitcoin exchange of outflows dwarf the amount of new BTC mined. So from October 15th to November 15th, Bitcoin exchange outflow dropped from 2.5 million to 2.355 million, the lowest level since August 2018. Approximately 145,000 BTC worth 2.35 billion at price point of 16,200 move out of exchange. So I guess, or what I think is, people are buying Bitcoin and holding on to it. They're not selling it or not planning to sell it anytime soon. In the same period, Bitcoin miners mined around 27,000 Bitcoin, equivalent to around 437.4 million. Since miners have been mining 900 BTC daily after the May 11th halving, 900 BTC times 30-day equivalent equals 27,000 BTC. This aggressive accumulation trend seen in the Bitcoin market shows that investors anticipate a prolonged post-halving uptrend. Wide decline in Bitcoin reserve is bullish. A block reward halving occurs every 4 years until the fixed supply of Bitcoin at 21 million gets reached. After each block reward and halving, the number of Bitcoin miners can mine per day declines by half. This means prior to the May 2020 halving, around 1,800 BTC were mined. Until the next halving in 2024, 900 BTC will be mined per day. The amount of available Bitcoin on exchanges significantly reduced since less BTC getting mined per day, alongside rising exchange outflows. If the demand for Bitcoin continues to rise, then the decline in supplies would cause the value of BTC to surge. Hence, many investors might be expecting the price of BTC to see a prolonged uptrend in the medium term. So the growing hash rate of Bitcoin. So Bitcoin hash rate rebounds after a huge difficult drop. The growing hash rate of Bitcoin blockchain is another potential catalyst for Bitcoin heading into 2021. So right up here, it's saying that every 4 years, the Bitcoin that's being mined every day will be cut in half. So 900 Bitcoin, right? And if you cut that in half, say in the next 4 years you cut that in half, that's 450, and so on. And the next 4 years, that 450 cut in half. So it's like you having a rare Pokemon card or something that's rare. It's just a certain amount of that card was made, and you have one of them. And because so many people want it and want to own it because it's so rare, it will go up in price. Just like kind of like gold, but gold is now rare. You can find gold anytime. Nobody knows how much gold is, but it is rare because it's not something you find every day. But Bitcoin is different. Bitcoin is 21 million, and there will never be more than 21 million Bitcoin. So that's the reason why every 4 years it gets harder for people to get this, and harder it is for people to get it, the more valuable it becomes. So that's all the news I have for you guys right now. These are very interesting articles. I'll leave the link in the description. Don't forget to like and subscribe. It's your boy Bitcoin Trapper. You already know.